As I have explained before, support and resistance levels can be flat, rising, or falling. They provide us with the information when approximately should an asset stop rising in price, or else, where it should hit the resistance level, and they provide us with the information when the price of an asset should bounce back up during a drop. The basic idea is to buy near support levels and sell near resistance levels. It is being on purpose set near the levels, not at the levels, because you simply have to give a little bit of space to the resistance and support lines. It will never be exactly on the line, especially when it comes to breaking resistance and support levels. You have to give it at least few percent up and down to really confirm that the level has been broken. Imagine that you give in to the signal of the support level being broken. Therefore, you sell your assets in order to buy them back cheaper after the drop is over. But then, suddenly, it bounces back to new highs and even breaks the resistance level, going up like crazy. And you absolutely miss this ride because you haven't given enough space for the breakage to confirm. One indicator can be the next peak or low after the seeming breakage. For example, if the price goes below the support line, wait for the next small rally after this drop. If the rally does not cross the support line back up, it gives you more confidence that the support line has been truly broken and the price will go even lower. The same goes with breaking the resistance line. If the next low after the seeming breakage of the resistance line does not go back under the line, you can be more certain of the breakage and a possible big rally up. Another indicator for breaking support or resistance that will help you to confirm this move is a high volume. If it's just a stock hitting the support or resistance line, the volume will actually get lower as the price is getting close to the levels, which indicates that the buying or selling power is slowing down. Then the volume should increase, but in the opposite direction, which would be with the support more people buying and therefore the price bouncing back up from the support, or when it comes to resistance, a lot of people selling and therefore the price dropping from the resistance point down. But if you are hovering around the support level and then suddenly there is a drop under the support level on a high volume, that is very probably a support level being broken and the market preparing for a major downward move, especially if you are looking at a larger time frame chart. Very important to understand though, nothing in technical analysis is 100%. Never bet all your money on this one indicator. Never trade with more money than you can lose. If you have made the wrong decision and you did falsely conclude that a support is being broken and you have already sold your assets preparing to buy back, simply, when the opposite move gets confirmed, buy back what you sold as soon as possible and therefore ensure that your loss is as minimal as it can be and you can still enjoy some profits as the value is rising to the resistance line. There is also one more rule when trading the support and resistance lines. Always make sure that the profit you are able to get from this trade is approximately 2 or 3 times higher than the loss you could possibly take on it. So, if you are buying at the support line expecting it to go up, make sure that the money that you can make when selling at the resistance line is at least 2 or 3 times higher than the loss you're going to encounter if that support line is going to get broken. Also, as I already said, but let me remind you again, make sure that you are not trading at a risk that would wipe out your savings. Always ask yourself, how much money can I lose on this trade? Hello everybody and welcome to the video about trading with support and resistance lines. So I'm going to show you an example on a support line. So this is our trend. It's an upward trend and this is our rising support line. This is our trend line, also used as a rising support line. So what I'm looking at are those moments when the trend hit my support line, and I want to see how the volume was reacting here. You can see that whenever it went down, let's start here at the peak of the resistance that I have not drawn. You can see that the volume is slowing down, and then there is a big candle in the opposite direction. Then, as I told you, it's never going to be just red and then just green, but you'll see that the volume is not really high. And especially, if we're talking about breaking support lines, you see that this volume is simply not enough. Plus, you also see that these candles are not very long. That means that the trading is not really going up or down in either direction. It's just kind of hovering on the same price with this low volume. But then it gets to the support line, and then volume increases as it bounces from the support line. And this is simply how it goes always. You see that there was a higher volume here for this little drop, but again, the candle is not very long, so it's an indicator of just this is not a breakage candle. And then the volume again got lower, and then again two big green candles, higher volume in an opposite direction. You can see the same pattern right here. You see that there's low volume when it got to the support line, and then high volume when it bounced back down. But now look at this case. This is the difference I'm talking about. You can see that these candles are way longer. That means that there were a lot of buyers, sellers, a lot of bulls and bears fighting where the price is going to go. And you can see there's a huge volume here, and it did slow down. But now look at this particular candle. This one is important because that's this particular candle. So here, we're still waiting, right? It's still on the support line. We don't want to make any big decisions. But with this candle that is very long, goes under the support line, but especially has high volume as an indicator right under, this is the moment when you have to get alerted, okay? And approximately here, when the breakage gets completely confirmed, this is where you need to sell. This is where you need to have your stop loss set up, because then you see that it plummeted even lower. And ideally, this is then when you want to buy back for cheaper. So this is how you work with the volume and, support resistance levels. Always check. When it comes to the breakage, always check how long the candles are, also, candle patterns that we will get into as well, and especially how the volume is high under that candle. It should be getting lower as it's reaching the support line, and then there should be a big rally in the opposite direction when it comes to volume, which means a lot of buyers suddenly buying. If that doesn't happen, you have to get alerted because probably the line's going to get broken. And one more thing, if you haven't had sold here, then definitely if the next rally, which is this particular part, does not go even close to the support line, then you really have to be sure that, okay, we're breaking down. Because that means that the buying power is not strong at all. If it doesn't go back above the support line, which, here already you can tell that that's simply too far on a too high of a volume. But again, if you want to be really sure, then this would be that rally I talked about before that did not at all reach above the support line, which means we are changing trends.